All right, what is up, traders? What's up, tycoons? Super excited for today's video. Look at Tectum Go. Right, we are getting a little bit of a pullback, okay, but don't panic. Not the end of the world. All right, we're going to break down the charts, go over, some of the key levels. Right, some of you guys are traders out there, and some of you guys want to know some of the key levels to trade at. Some of the key levels to potentially buy the dip at. Where can we go up higher from here? Oh. Ultimately, I think this can go up to 65, right? If we keep up momentum, 2024, we can definitely see this go up to 65. There's a lot of work to be done until then, okay? And we're going to go over what needs to be done in the short term to get back above 41. Okay, above 41, then we can potentially hit 55, then 65. All right. So we'll break down everything in today's video. There's something really important happening on the RSI that we saw happen previously. And, we needed to break out from this for the actual token for the coin to, break out. And that's exactly what we saw. Okay, so we'll break down Tectum in today's video. Be sure to smash the like button, subscribe to the channel. As always, the content provided is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I actually started a completely free newsletter for you guys called Investment Intelligence, giving out free trade ideas, free valuable finance and trading content every single week. All right, and these are what the trade ideas will look like, highlighting chart conditions, show you guys the chart itself. All right, many of these trade ideas have worked out very well. And the reason being is because I choose quality over quantity. So I'm not spamming your inbox every single day with 5 to 10 different trade ideas, bragging about 1 or 2 that worked, right? Rather, I'm, going through the markets, looking for 1 or 2 high quality setups a week that I can provide you guys with. All right, the most recent one was RTX, okay? And you see people hitting me up in the Discord, RTX up over 88%, right? And those actually ended up going up over 100%. So, sign up for the newsletter if you guys are fans of free valuable content. You'll really enjoy it, right? You can actually get into the Discord right now for $1, okay? Just $1, doing really just trying to kick off the new year with Jan24, okay? That is the promo code Jan24 will get you into the Discord for just $1. And that's where you get all of my different analysis, all of my different trade ideas. And you can really see what it is that I'm looking at, in the Discord, as well as the other, valuable resources and things like that in there. We have a few bots, and the bots can do some really amazing things in there for you, especially if you're a beginner. They can chart some stuff up for you very nicely. It's surprising what the bots can do these days. Now, let's get into the video and talk about Tectum. All right, so 41.806, that is our resistance right now. Okay, so that is our key overhead level. We're not able to close above there, right? That was our next bullish price target after hitting 37.692, right? If we may get some mean reversion here, well, what does that mean? All right, you see we extend way above the 10-day moving average right here. And then what do? We revert back to that moving average. We're trading well above it again here today. So I wouldn't be surprised if we were to chop around and come back near that 10-day moving average. Okay. But the real important thing that you want to look for right now to spot the next potential breakout on Tectum, right, which is what everybody really wants, is they want to know when's the next time is it going to break out? Well, it needs to break its bearish divergence. Now, you may not have ever heard of bearish divergence, but it's not as complicated as it sounds. Okay. Take a look here how we have a high and then a lower high. Okay. Very simple, right? If we go and take a look at the price, we have a high and then we have higher high. Okay. So, this is why it's a divergence, right? You can see here we're in an uptrend. You can see here we're in a downtrend. So we're making lower highs on the RSI, higher highs on the price. And this is an indicator saying that, hey, we could have some bearish activity. Now, does it mean that we're going to have to crash, right? Does it mean we have to crash and go to zero? No, it doesn't mean that, right? What it tells you is that we're losing relative strength, because that's what your RSI is. So we're losing relative strength even though price is going higher. And what do you see we do? Well, we end up pulling back slightly, right? But right here at this point is when we actually break out of the RSI. And once we break out of the RSI, you see there's a very strong push on the price. Okay, and that was a very nice breakout there. All right, and then we came back, retested that initial level, all right, from where we broke out on the RSI, and we went to the moon afterwards. Okay, so that's what you want to look for. That's what you want to pay attention to right now, because if you notice, we have a high, right? We have a lower high, we have a high, and then we have a higher high. right? So again, price is in an uptrend, right? RSI is in a downtrend. This is a bearish divergence, right? It doesn't mean that we have to crash and burn, but it is an indicator that, hey, we could see some type of bearish activity in the future. And if you look right now, we're consolidating and chopping around. So it should be no surprise. For us to really, see the next big move and next big breakout, right? We're really going to want to see us break this bearish divergence. Now, keep in mind, we're in overbought territory at the moment. Okay. Above this red line here is overbought. And that typically is not the best time to be buying, right? A lot of times people who buy in that overbought territory, they're FOMOing in. Okay. And it's not to say that something can't go higher if it's overbought. I mean, obviously we're extremely overbought here and we still went way higher, right? We're overbought over here and we still went higher, right? We're overbought here and we still went higher. It's just a general rule of thumb. The more tickers you look at and the more you notice, typically, the odds are much more increased of a pullback buying in that overbought territory. So it's something you want to stay away from. Now, support wise, here's what we got. Okay. We're currently testing 37.692, right? That was our bullish price target. We're trading above it. If we can hold it, that's very clean breakout and then potential retest to push up higher and start heading towards our next bullish price targets. But if we were to break that, it's not the end of the world. We've got our three major Fibonacci retracement levels right here. Those are going to be the 38.2, 50%, and 61.8. Now, I use those because those are the three most common and well-respected Fibonacci retracement levels. There are others, but you don't need to complicate things too much. You can just use those. Now, those are going to be at 35.12, 31.77, and 28.41. Right. Those are all levels where we can come up, pull back, have a healthy retracement, and then continue the uptrend. Right. Now, that's really why you use the fibs. Okay. Is because nothing moves in a straight line down and nothing moves in a straight line up. Rather, you would get a move up, retracement, continuation higher, or move down, retracement, continuation lower. Right. And that's typically how the market's going to move. Now, you can also use it to spot reversals. Right. So if you move up, retrace, and you start consolidating, break through those retracement levels, that's how you can spot a downside reversal. So if we had the strong push up and we consolidate through here and we break 28.416/27, all right, and we break those levels, then that's when we're most likely getting a reversal to a previous area of liquidity, right, which would be something right around here, right around in this zone, right around the $12 region roughly, right, a little bit above, a little bit below, but that's your rough zone where if we were to break through our major retracement levels, that's where we would look for potential retest of an old zone over there. So that's really all I'm looking at when it comes to Tectum right now. Really amazing push, really amazing move here recently. We'll see if it can keep that up, but a little bit of sideways chop or a pullback isn't going to be the end of the world. Hopefully you guys know some of the key levels to watch right now. Let me know your thoughts down below. Do we get to 55 or 65 this year? Does it happen very soon? Does it take forever for it to happen? I'd love to hear what you guys think down below. Don't forget to sign up for the newsletter. Okay, it's completely free. If you like free valuable content, you'll really enjoy that. And you can also get into the Discord right now for just a simple $1 using that promo code JAN24.